Get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have NCR Corp, ticker is NCR. Price at the point of funding is $22.82. This is not recommendation, not advice. Please do your own diligence before investing into anything, and let's get right into it. Description, intro. The spin-off of NCR's ATM related business is on track for October 23. It is a good time to revisit the situation and consider the pro forma numbers. The separation through a tax-free spin-off was announced on September 16th and 22. The two public companies resulting from the separation will be RemainCo CommerceCo, will consist of NCR's retail, hospitality, and digital banking business lines, etc. And SpinCo slash ATMCo will consist of NCR's self-serving banking and payments and network business lines. Let's get into an elevator pitch real quick. NCR's separation will unlock a significant value if completed. As we show below, at a valuation of 10x EBITDA for CommerceCo and 6x EBITDA for ATMCo, we estimate that NCR's total value could reach $45 per share, or about 100% plus upside. Target multiple sensitivity is also presented below. Similarly, if capital markets allow for sale of NCR in lieu of the separation, we believe that a financial buyer could pay at least $40 per share in a conservative LBO scenario. Of course, a strategic buyer could likely pay even more. Transaction rationales. Both new companies will benefit from more focused capital allocation and increasing operating flexibility. Specifically, CommerceCo will reinvest in higher growth opportunities across its verticals, while LTMCo will offer stable and sustainable cash flows and capital returns. Following the separation, the two companies should attract distinct shareholder bases, allowing for a more full and fair valuation of NCR's assets. Beyond those rationales is the obvious valuation uplift potential of a misunderstood public company that has been unable to shake the negativity surrounding its low growth ATM business. This negativity has certainly been further inflamed in the current regional banking crisis. NCR, in its current form, just can't shake the perception that it is an ATM company. At around 6.5x 23 EV EBITDA pre split, we believe NCR trades at a valuation of its worst the valuation of its worst division, despite a substantial portion of its cash flows coming from much better businesses. The separation or possibly sale of NCR is a clear near-term catalyst to remedy this discounted valuation. Backstory. NCR announced the separation at the end of a review of strategic alternatives that began early in 22, which included an evaluation of a potential sale of the company. Though there were credible reports of large private equity firms pursuing a potential transaction, financing markets deteriorated throughout the summer, and NCR ultimately concluded that its best path forward would be to pursue the separation. Still, management has made it clear that it remains open to a sale of the company should financing markets recover and/or buyers make an acceptable offer prior to the separation. There's a prior write-up on VIC on NCR by Celtair from November 2020, with some active Q&A through September 22, with a separation was announced. This provided good background into the sale process expectation and reasons for its non-completion. It's not hard to conclude there's a fair amount of deal fatigue built into NCR's current price. NCR business description. CommerceCo offers integrated hardware, software, and services across the retail and hospitality industries and software applications to the banking industry. CommerceCo is the number one provider of point of sale POS software and self-checkout SCO hardware solutions, and as such, the business enjoys a large installed customer base across blue chip retailers, restaurants, and banks. The retail vertical manufactures SCO terminals and designs and sales related POS software to help grocery, big box, and convenience stores, as well as gas stations, run the store. When combined, NCR's hardware and software bundle integrates functions including inventory management, fraud and loss prevention, loyalty and consumer management, mobile order or pickup, and checkout and payment. This business benefits from retailers modernizing their stores and adding more SCO terminals, thereby reducing their reliance on labor. Over the medium term, this business should enjoy mid to high single digit revenue growth and modestly faster EBITDA growth. The hospitality vertical manufactures POS terminals and designs and sells software applications that help table service, quick service, and fast casual restaurants run the restaurant when combined. NCR's hardware and software bundle integrates a variety of functions, including ordering and seating, processing of drive through orders, and payments. This business benefits broadly from restaurant companies seeking to modernize their units in order to improve efficiency. Like the retail vertical, this business should also enjoy mid to high single digit revenue growth and modestly faster EBITDA growth over the medium term. The digital banking vertical helps financial institutions, primarily banks, implement digital first mobile banking applications. The business designs and sells software that integrates functions such as account opening, account management, account transfer, mobile check deposit, and bill payment. Over the medium term, as banks and consumers increasingly adopt digital first banking solutions, this business should enjoy low teens revenue and EBITDA growth. ATM Co. provides ATM hardware and software for bank owned ATM networks, as well as ATM fleet management services. ATM Co. also provides access to one of the world's largest surcharge free ATM networks for financial institutions, neobanks, and fintech companies that need to create or extend their retail presence. ATM Co. enjoys a large installed customer base across both global financial institutions and retailers. The self serving banking vertical manufactures ATMs, designs and sells software for ATMs, and provides related installation, maintenance, cash management, and delivery services. When bundled, these services comprise NCR's ATM as a service offering. This business benefits from banks upgrading their existing ATM fleets to handle more basic business functions and increasingly outsourcing the management of their ATM fleets, which allows those banks to both reduce operating expenses and improve customers' experience. Over the medium term, as these trends continue, this business should enjoy low single digit revenue and EBITDA growth. The payments and network vertical management manages a global ATM fleet that includes ATMs owned by NCR on which customers place their brand, as well as NCR's global all point retail based ATM network. In addition, this business provides ATM fleet management solutions to retailers that have ATMs on site. NCR's All Point network provides a cost effective way for financial institutions, and neobanks, and fintech companies to reach and serve their customers, who in turn use the surcharge free ATMs for a variety of transactions, including withdrawing cash, depositing checks, paying bills, and adding funds to digital applications. This business generates revenue through interchange, transaction, surcharge, and network fees. And as the number of endpoints and transactions across the network increases, it should enjoy mid to high single digit revenue and EBITDA growth. The numbers. Today's enterprise value, we believe the current enterprise value of NCR penalizes the company unfairly because of the slow growth and challenges of the well-known ATM business. The valuation also clearly reflects considerable deal fatigue after an aborted 22 sale process. Current price $22.80. Market cap 3.534 billion. Enterprise value he sees at 9.668 billion because of almost 5.7 billion in debt and leases. Excess cash minus 277 million. Pension, OPEB, environment, and liabilities 684 million. Estimated 23 EBITDA, 1,461. I'm assuming 1,491, sorry. Multiple 9.48 and estimated 24 EBITDA 1,626,000,000. There's something odd here. How's that the EBITDA? No, whatever. Multiple 5.95 million. Growth forecast. NCR may also be misunderstood for reporting 23 revenue growth of only plus 1%. This understates NCR's true organic growth rate significantly because of the recent dollar strength. Constant currency revenue growth was plus 4% in the most recent quarter, and the effect of a migration of customers to recurring revenue contracts. Both factors should become tailwinds ahead, and we submit that NCR's steady state organic revenue growth rate is 5 to 6%. Commerce Co. valuation. We suggest that Commerce Co. Could command an EBITDA multiple of 10x based on our expectation of sustainable 7 to 8x revenue growth and low double-digit EBITDA growth. This is supported by healthy revenue and EBITDA multiples across the financial software and digital banking sectors, and specifically growth multiples among comparable retail and hospitality software providers such as Shopify, PAR Technologies, and Toast. So he sees Commerce Co. value per NCR share at $34.68. ATM Co. valuation, we expect that ATM Co. can command an EBITDA multiple of 6x based on its modest net leverage, visible recurring revenues, and healthy free cash conversion. This valuation is supported by a reference to hardware providers such as Diebold, as well as payment and network firms such as Jack Henry, Fiserv, and Global Payments. ATM Co. value per NCN share he sees at $17.31. Sum of the parts, the results is much improved combined expected value of NCR's component parts, which could reach a 2x return within a year. Total value per NCR share, $45.75. Upside 101%. Sensitivities, the following table shows post-separation target prices at a range of different multiples. And I won't read this out loud. It's better if you look at it, if you watch the video. LBO analysis. To further test and support the NCR value proposition, we ran an LBO model at an assumed $40 takeout value. All in, about 7.6x 23 EBITDA. We assumed 5x 23 EBITDA and available leverage with a 10% cost of debt, 1% transaction fees, and SBC converted to a cash comp expense, stock-based compensation. Under our conservative assumptions, the 5-year constant multiple returns to the equity work out to roughly 3x MYC and 26x gross IRR. Financial buyers take note. Catalyst, a separation of NCR into two companies, Commerce Co. and ATM Co., is a few months away. This could cause a significant positive re-rating of the stock. Thank you very much for tuning in. See you next time. Please write down your comments or your ideas to the company below.